Hello, patrons of the religious investors community. Welcome back to the channel. In this conversation, we're going to be talking about an important investment opportunity. We're going to be talking about one of the greatest of American enterprises. We're going to be talking about the company known as Microsoft, with the ticker symbol msft. I hope it's going to be an interesting conversation. I really want to thank you for supporting this channel by watching it, sharing it, liking it, and subscribing to it. Recently, the YouTube sent me some type of acknowledgement of how we are doing, and I was excited to learn that this humble effort is being acknowledged even at that level. So let's keep up the work, the good work, and let us benefit from it as much as we can. Before I go further, let me reiterate the disclaimer that this is not a financial advice, and this is not meant to ask anyone to buy, sell, or hold the shares or the stock of this company. This is our own effort to learn more about what's outside there for us to invest in, and to equip ourselves with the necessary knowledge and information that can aid us in doing that. So it's going to be fairly compressed. I'm going to talk about the company and about the latest development in the market as it pertains to this particular company and stock. I'm going to talk about a few more things. So let's start by briefly introducing Microsoft. There's not much I can tell you about Microsoft. As a matter of fact, I expect that you know better about this company. But from an investment perspective, let's start by looking at this company as looking at the place of this company within the in the investment universe, or within the stock market, or on the Wall Street. The first thing that I want to share about that is taking a step back and look at the history of the company. This is a company that one of the companies that championed the computer revolution. Up till now, we are going through a third cycle of a new revolution that is of a universal impact within the last 50 years or 60 years plus. In the 80s through the 90s, that's when we were introduced to the computer, and computer became widely used and become like a universal, ubiquitous product, and becomes like a tool that everybody would have to do anything meaningful or to engage in any form of endeavor. So this company, along with several others, brought that revolution about, and it is one of the two that survived that revolution and continue to champion that revolution. So between the 80s and the 90s, we didn't know, there wasn't a lot of tech companies other than, say, Microsoft, Apple, and a couple of others that are still probably there or not there anymore. Um, so secondly, we entered into the era of the internet at the close of the millennium. And by the year 2000, we were in the new era. We came into the new era of the internet, the new era of internet. And this company also became a leader. And these are the companies that enabled us to have their revolution and to propagate it. So now, and there's a new, the latest revolution now is the AI revolution. And this company has also positioned itself as a leader, or as enabler, or as people, or as a company that has set itself up to lead this revolution, to take advantage of it, and in fact, to direct it and use it to their advantage, or in such a manner that they become very, very important for the takeoff of the revolution. So when you look at Microsoft from this perspective of a leader, of a champion, and of an indispensable company for all of these revolutions, I think you should appreciate it. The one other thing, a point that I want to say about this is that we're not really, our primary interest is not just because it survived and stayed as a leader, but let's look at the investment opportunity that it has presented to the world, the investment world, during that period of about 30, 40 or so years. You may have read or may have learned a lot, like I do, which companies make the most millionaires in the past 10 years or in the past 20 years, and so on and so forth. But here I want to give you one quick proof of that. When you look at the Microsoft price action, I picked on this very important note. Microsoft's price opened on the stock market in the year 1991 at about $1.42, $1.22 or 26 cents. And it closed on that particular day in 1991 at about $1.46. Think about the percentage increase on that one day. The same stock price, the same company's stock price as of today, this week, or as of the last earning, is $420 or about that. What is the percent of the incremental percentage between $1.42 in 1991 and $400 and $400 plus around this time? So instead of telling you which company made how many millionaires and so on, so when you read information like $1,000, $5,000, $500 invested in Microsoft 20 years ago will give you $500,000, $1 million, or any of those things, you can check it out for yourself. Because if you bought a share of Microsoft in 1991, which is just about 30, 35 years ago, and is now selling today for over $400, I think you have made a very good profit. And if you had, if you had invested $1,000 or $500, then you can multiply the the profit and see how much you've gained. So I'm going to move on to the last earnings, the last earnings report, which occurred, I think, the first Wednesday of this month of February, year 2026. Two things happened as a result. One, the company lost a lot of money, or the stock price fell significantly by over 10%. And this is an issue, but we need to understand it, because behind that fall may hide a big opportunity for young investors. But let me be a little more, give a little more information about that. As a matter of fact, in the past few months, or between the last quarter of last year and this one, Microsoft has lost about up to 20% of its valuation. About 20% of its valuation. So because the stock rose to about over $500 somewhere in the middle of last year, and is now in the low 400 plus. That's about 15 to 20% decrease. And this is a company with 3.3 or 3.5 trillion dollar capitalization. So if you lose 10% of 100 billion, that's a 10 billion amount. And if you lose that times 10 or times 10 times 10 times 3, you're talking about a whole lot of money. So a behemoth like Microsoft, when they shed 5%, 10%, 15%, 20%, is a lot of money. But because they are a very well capitalized company, because they have they're sitting down on a treasure trove of dollars, and because they are very strong, and because they are also fundamentally sound, they are expected to overcome that loss within a short time. And that's where the opportunity lies for young investors. The first opportunity that comes with that fall is that we are getting a discount for buying this share of this important company. And so when I crafted this topic by saying, when they fall, we rise; when they sleep, we eat; and when they rise, we rise even higher. That's what I have. That's what I have in mind. I.e., great companies that we would otherwise have hesitated to buy, to invest in. Sometimes they come down for us to say, do you want to get in and join us on this ride? With a discount of about 10%, 15%, 20%. That's probably as best as it can be for young investors to join in the ride. So the other problem that comes from that annual report is that we were able to learn why the stock price actually dipped. It didn't dip because there was any important fundamental issue with the company. The company remains a very profitable company, money printer. The company's moat remains intact. The products, nobody is saying we no longer want to use my Microsoft products. The government continue to give them contracts. The software and the hardware continue to print them money. And investors' interest, and everything just keeps going right for them. And they've grown and grown and grown. And so why did the stock price fall then? Two main reasons. There's a wide fear about the effect of AI on software companies. You can learn more about that, and we can talk about that in another video, because there's a general fear that the tech industry is being challenged, or is being put under and is been put on the notice that some of what they are doing and making money from is going to be done by AI now, and they're going to lose that margin, and it's going to affect their bottom line. That's a general fear, which applies to all of the leading tech companies, whether it is Apple, whether it is Microsoft that we're talking about, whether it is Meta, whether it is Google, and all of these other things. And I will speak specifically to each of these members of the Magnificent Seven separately. So, but where the problem is coming from is in respect of their CapEx, capital expenditure. Microsoft, like I said just about now, wants to be the leader for the AI revolution. And they are helping and spending a lot of money to build the AI infrastructure. About their relationship with OpenAI. You know about the fact they are the ones funding the build-up of the AI infrastructure and the data centers. They are the companies behind Applied Digital, Iran, Navios, and all of those other companies, new companies that are involved in the AI infrastructure build-up. Without their spending, these companies will not do nothing. We are a capitalist world. The government cannot fund this project and cannot fund this revolution that much. All they can do is what they are doing. Give them tax evasion or advantage, which is what I understand to be tax incentives and all these kind of things. But these individual private companies, they are the ones that are. So to put this in succinctly, Microsoft spent about $80 billion in the fiscal year 2025 to fund AI infrastructure. And when they came out with their annual reports, they reported that they are going to almost double that amount in the fiscal year in this current fiscal year. So investors began to say, okay, if you are spending this much, automatically it's going to affect your bottom line. It's going to affect your margin. And maybe you are actually going to be borrowing money to do this. And all of this is not good for investors. So investors became scared and worried and dumped the stock, but they're going to come back. So because that's just to send a message to the company that we don't think this is going to be as profitable. This is not in the interest of the investors. But the point is that these companies have to grow, and they have to try to defend themselves against. They have to capture this new revolution and lead it. And there's no way that anyone can say that these are not the companies that are going to actually enable us to use AI or monetize AI when it's become readily available. So I'm not going to take too much time to talk further about valuation, but my point here is that there is an opportunity behind the fall or the dip in Microsoft share price that investors can take advantage of. And majority of the analysts have I'm basing this on the opinions of the top analysts, that this is a situation where the fundamentals are climbing while the stock price